The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 8th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential is what we must master each and every day. So let's begin with an empowering belief or two. Folks, this is the way that I think you should start each day. In fact, you can do some, do some exercise, do some jumping jacks, and then repeat this or something like this. And, in fact, if you've got one of those rebounders, it's not bad to jump on a rebounder and repeat something like this. And it goes like this. If I can't, I must. And if I must, I can. Because I know that the path to success is to take massive, determined action. That's right, massive action, because if I must, I can. And in the end, I will live life fully while I'm here. I'll experience everything. I'll take care of myself and my friends. I'll have fun and be crazy too. And I'll probably screw up from time to time, so I might as well enjoy that process too. I'm going to take the opportunity to learn from my mistakes, and I'll find the cause of my problems and eliminate them. I'll never be perfect. Just be an excellent example of being an extraordinary leader, because I will lead, not follow. Yes, folks, start each day reciting that incantation, and you will achieve your outcomes. Let's go check out the outcomes of the markets here right now. We've got the Dow up 24 points, trade out at 15,494. S&P is up 3.5 at 1694. Composite up 2.5 points at 3656. Russell 2000, the leader in the clubhouse, that's up about 0.3%, up 270. Trade at 1047. Google's up 34 cents. Apple down 260. Microsoft up 7 ticks. Intel back 25. Our call-in number is 877-927-6648. Give us a call. We can take a look at your stock. Let's start off by taking a look at the S&P 500. So where are we at? What have we done? What did it do yesterday? Yesterday was a test and a rejection of that May 22nd high out there. So May 22nd proving to be an area that is being talked about quite a bit. The top of that is 1687.18. Yesterday was a test of that area on lighter volume. You're still trading above that range. Of course, yesterday was not just a test of that horizontal resistance area or support area. It was also a test of a diagonal resistance area. That's that trend line coming off of the November 16th low out there. So that's going to be a key area for us to continue watching. So far, we've had a pop and a drop. What it is that you would expect in a bearish market out here. We did get the gift. We did get that bounce out here. And I would say that if we close... I'm just kind of watch these candles, but it's really giving me the indication that that gift for going short is really right here, right now. Now, the divergence that we still have out here is in the S&P 500, and today's action will be very telling. If, in fact, today what you would see is a close below that trend line, or at least back below 1687.18, you'll be back inside the bottom of the range, and that's what sets up that move down towards that June 24th area out here, and that would be where you'd have a break of the. Let's take a look at a couple different scenarios here. Number one, if we just simply take a look at the June 24th low, all the way to the high that came in on August the 2nd, the minimum pullback is going to be 1652. Why do I say that? Because that's nothing more than just a 0.382 retracement. That's nothing more than a dead cat bounce. 1617 would be more likely your normal number. That would be your 0.618 level. And we know we've got big volume at that June 20th downdraft day, the top of which is 1624. So when you break the trend line, when the S&P breaks the trend line and gets back below 1687.18, that's really what it's signaling to us, is it wants to move to 1652 first, and then that 1617 area, and then perhaps finally the test of that June 24th area. So that is on the S&P 500. let's go take a look at the SPY itself, see what the SPY is doing. We'll take a look at the volume characteristics there. Makes it pretty easy. If we take a look at yesterday's volume, which was also a test of that May 22nd high and a rejection, 169.07 was the number, 243 million is the benchmark, and yesterday was a move down with 84 million shares. That was a rejection, so you're still up above 169.07. Look, if the market touches those areas and rejects it, here's what it brings into play. It brings in these 1.272 butterfly patterns. On the SPY, it's 172.73. The SPY's got to get into the lower part of the range, just as the S&P 500 does. If we take a look at the S&P 500, you'll see that the butterfly pattern, the potential butterfly pattern, is also out there at the 17, 20, 29. So we need to see a real break, real conviction to the downside, and it's summer, it's Thursday. We'll see what we can get behind this move. But what we are seeing here, and this is perhaps the more important thing, is, the bounce that we talked about yesterday during the show that I absolutely fully expected. We got that. The bounce took us to the 0.618 retracement level, and then what we saw here was we have seen the Bears absolutely take control. The Bears have control of the ball. They have for over a week now, going back to last Monday out there. They just haven't been able to really just break the backs of the Bulls either, but they do have control of the ball. And in one big swoosh, that's what we will likely see at some point in time here, a big swoosh to the downside. But right now, we're just paying attention to what the chart patterns are telling us. Let's go take a look at the other chart patterns. Let's take a look at the NASDAQ composite out here. Oftentimes we overlook the composite. If we do, and because this has been the real strength in the marketplace, we talk about the Russell 2000, but really the NASDAQ composite has been the number out here. You can see right now that's traded at 36.53 as we speak. If we take a look at what's the retracement that the composite did as well over the past couple days, coming from the high of August 5th down to the low of yesterday, you can see an exact 0.618 retracement, 36.7104. So this could be the beginning of the A to B equal. We may have seen the C point form here early this morning. Inside the composite, the small A to B equals CD down. That'll take you to about 36.11. That'll get you back into. Now, May 22nd is way down in the composite. That's out at the price level of 35.32. So it would have quite a ways to get to before it would be testing that area. We also know that the composite was in the extreme overbought territory on August 5th, and right now that condition is being worked off. So either an A to B, small A to B equals CD down, but the composite is one that we are going to want to really pay attention to, just as we want to pay attention to what's going on in the Russell 2000. The Russell 2000 was the index that actually had volume that was similar to Tuesday's volume. The other indexes did not. Inside the Russell 2000 right now, just having an inside day here, but 2 days in a row. I don't know if the Russell has really seen 2 days in a row with a move down since, I guess we have to go all the way back to June 19th before we saw that. So I'm moving down into the swing point here from July 29th. That's really, if you're bearish and you happen to be inside the IWM, you are looking for a close below 1038.93 for some additional confirmation and follow-through. And the reason that you're also looking at that is there never was a floor that was built on the way up once price got above the May 22nd area. So if the Russell 2000 can get below 1038.93, the next area for it to come back and test is going to be that May 22nd area at 10,000 at 1,008. Let's take a look here at the NDX 100. Let's go see what it is doing. Then we'll go peek in on the VIX index and see what that is doing as well. The NDX right now traveling out at 3111. This here yesterday, so still no real breakdown. You're looking for this to get below yesterday's swing point of 30.96 to give you the first indication. Let's take a look at the retracement. Looks like a little bit, maybe a 0.786 retracement from the high here of August the 5th down to yesterday's low. And yes, that was a 0.786 retracement. 34.80 is the exact 786 number, and it got to 31.34.73 out there. So it very much is looking like the C point was attained. The C point was attained. You got the, I guess we got the gift here this morning with the markets pushing up as we thought, and now we are truly seeing the bears step in and do their thing. Their little dance step here, which is to sell every rally. That is a message for sure. Let's take a look at the VIX out here. We've got the VIX here. Yesterday tried to get back inside that rising trend line, but failed. Looks like a shooting star candle. Smells like a shooting star candle, but there wasn't enough really of an up move here in order for that to be a shooting star. So there really is no resistance there other than the real trend line that was out there. The VIX right now at 1305, where things become very dicey in the markets is going to be when and if the VIX gets above that 50-day exponential moving average. Right now that number is 1406, so it's $1 and a penny away from that. Man, if you are to see the VIX get up there today, tomorrow, whenever that is, above that 50-day exponential moving average, please, please, please make sure you are using stops. You know, if you're in individual equities, that makes it a little bit easier. But if you're in the indexes, if you are long the SPYs or the Qs or whatever, it is a dangerous thing when the VIX gets above that 50-day exponential moving average. So you want to be careful out there. Speaking of the Qs and the diamonds and the IWM, let's go actually take a look at the ETF structure here. We'll finish that off. We only took a look at the SPY. Let's go take a look at the other three. Let's look at the IWM here. Yesterday, as it was moving down, it did 23 million shares. The day prior was 24 million shares. So you can see keeping up a very similar pace of volume on the way down. So that's a positive sign for the bears out there. Again, you can see the high is the high volume day is May 22nd, taken out with light volume on the way up. That's the area where it will test if it continues to move down, 100.38. Let's go see what the Qs are doing. And we're also going to go take a look under the covers and see what's going on inside the S&P sectors. The Qs here right now at 76.37. Yesterday's move, very light volume. So we saw a bit of a sell-off, some accelerated volume off of the top on August 6th. That was with 23 million after the prior day only doing 15 million to the upside. However, yesterday was a bit dismal. That dismal number was only 20 million shares to the downside out there. The Qs up above the 9-period EMA. If you take a look at my screen here, I've got the 9 and the 18. When you really want to get cautious is when that 9 crosses through the 18 to the downside. That's where you're serious. There will already have been damage in order for that to have taken place. So you don't use that as a time to get in and get out, but you use that more as a trending tool as to what's the trend, what's the current trend of the market. Trust me, I've done the back testing on all of those moving averages. In fact, if you want to understand whether or not moving averages are lagging indicators, just go do some back testing on crossovers and see if you can find a profitable trading strategy out there. Because for the most part, you really can't. I have found one that works, but it is a lagging indicator for sure. In any event, let's go over to the diamonds. Let's go check out the diamonds out here. We've got the diamonds are still below the trading range of, or in the lower part of the range. That means below the May 22nd swing point. The only one that is. Yesterday was a move down to the diamonds with only 4 million shares. A little bit of accelerated volume, 3.5 million shares the day before. So far in today's trading, 1 million shares in 44 minutes of trading. We'll be right back, folks.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's down 7, S&P is up 2, NASDAQ up a point right now, and flying off the shelves, we've got silver up 3%, that's up 58 pennies. You've got platinum, that's up 3.25%, that's up $47, and you've got copper up 3.2%, that's up 10 cents as well out there. Let's go to our caller, John in Philly. John, thanks for calling. Thanks for holding. How are you this morning?
Hello, Steve. Good to talk to you, sir.
Thank you. Thanks so much for calling. You wanted to, were you asking me the question about Mackinac Island this morning, or was that for someone else?
No, that was me, sir. Yep.
Yeah. Have you been up there recently? Have you been up there recently?
You know, it's been 2 years. So the answer is 2 years.
Yeah.
And I always loved it. I knew you were originally from Michigan, so I...
yeah, what a great place.
You've been up there during the summertime.
Yeah, it's a great place. I personally haven't been for quite some time, but you know the northern part of Michigan is it's an incredible place, incredible place. So, you know, a lot of great. You know, I think it's just beautiful. As beautiful as it
is. God's country. There's no doubt about it.
Except for those big black flies when they're out in the August time frame.
Very good.
You know.
I would like to ask you to look at GDX. I personally took a position late Tuesday. I didn't see the decline as severe as it was on Tuesday, but as I started to take a look at it, I was attracted, so I bought it. What I wanted to do is ask for you just merely to give your fresh eyes on the daily GDX chart. Share with us what you see, where you see the next move going according to your work. So I appreciate that in advance.
Sure, no, my pleasure. And just like yourself, I too did not see that move coming that we saw on August 6th, 2 days ago. And I had even written in my newsletter, because there are a number of gold equities that we are looking to get into. And I had in the basis of the newsletter said, we're gonna go ahead and take our position. We're gonna take our cue from the actual gold contract. Just simply because of the correlation between the GDX and gold. And so I had specifically laid out what we were looking for, but I forgot to put the trade on hold. That included the GDX. So I'm actually long the GDX myself right now, along with another equity that we got into. The GDX, there's a technique that I taught to my subscribers maybe a couple of weeks ago, and it's a wonderful technique, especially for things as they are coming off the bottom. And that's really what we're talking about when we're taking a look at the miners and gold, the metals entirely here, is how do you identify that and where are those changes in trends? And it's a tool that I use, John, that is different than just regular Fibonacci work or A to B equals CD work. And how I got to that tool was by going back and taking a look at a number of stocks that had been beaten down, that even when I would be on the show, I would say, stay away from it. And then all of a sudden they started turning, and they started turning up. And I went back and said, what was it that I missed here? What did I actually miss? That's where I came up with this tool that seemed to work as I applied it to each of those. In the case of the GDX, I can tell you that today a close above 25.02 is another buy point. It confirms a buy point. Right now it's trading at 25.06. So for your sake and for my sake, I hope we get a close above 25.02 today. That's the first element. Go ahead.
Let me just ask you, I am in the Tiger's Den.
Yeah.
By the way, Tom O'Brien, TFNN, and all you folks at the team with this interactive chart sharing is just fabulous. My question to you now that I'm looking at your chart 2502, where do you come up with that figure?
I would rather not share that over the air. I'll send you an email.
No, that's fine. Okay. I can always ask, and you can say no. That's fine.
Yeah. But I am looking. I will tell you, I'm looking at the candle from August the 6th. That's for sure. So that piece of it is August the 6th. But at least at this stage here, this tool that I'm using, I'm really keeping this one here for my clients and subscribers. At this stage, but so it's 2502 on that. The other key that I think, because the red line that's on the chart here is the actual gold contract, the continuous contract. And I had a caller last night in doing Tom's show. I'm just going to pull this back a bit. And the question from the caller was, does the GDX track what the movements of gold? And it is so clear as bell that it actually does. And so the other element that I'm really looking for is in the case of is actually in the case of gold. And so I really want to get that confirmation in gold today, and that means I want to see it close today above 1306.40, and we're at 1303.90. All right, Johnny?
Thanks, Steve. I appreciate it.
Hey, no problem. Thanks so much for calling. 877-927-6648. Be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow's off 27 points right now. You got the S&P in the red, just slightly. Russell 2000 is the only thing that is green. I suspect that will turn red here shortly as well. We're going to really pay attention here to this hammer candle on the Dow futures contract. That is going to be penetrated. 15,375. You're at 15,394. Looks like post-haste out here. Nothing could be clearer now than what it is that we have seen unfold here this morning. And that is that this rally, every rally is going to be sold. You know, when dips were being bought, well, yesterday's move, when I was just simply calling for a bounce in the marketplace, was just simply a set of tools that was just an indication that we were going to get a bounce. And that's exactly what we did. We got it to the 0.618 retracement level. And then we watched the bears rush right back in and sell this rally. So we are truly in sell rally mode. So here's what you do. You wait for the next rally, and that's what you do when you sell. Now, you know, the bulls are doing everything they can, and yesterday was an example of trying to hold the market up. You know, we have light volume that's going on, so you've got distribution, in essence, that is taking place up at these highs. But the most important thing here is the signature of what we've taken a look at this morning here. So calling the bounces, there are certain divergence indicators that can occur out there that, 75, 80% of the time lead to market bounces, and that's what we got yesterday. Even though in the futures contract we had the bulls really try to defend their position, that hammer candle is about to break. And in the case here of this hammer candle breaking, once you get below 15,343, which is a low of July 26, there's really nothing to stop the Dow from moving down into the first area where it would probably move down to is the July 3rd region, 14,751 to 14,957 out there. So clearly we are seeing the transitional change between the bullish and the bearish market out there. And as I say, the bears have fundamentally, technically, I won't say fundamentally, technically, they've had control of the market since last Monday out there. And, net declining issues as we speak here right now, another 520. So a lot of damage that is being done underneath the covers in the marketplace out here when you take a look at the wider swath. Let's go and take a look at, see what kind of damage, if anything, is being done with inside the sectors inside the S&P 500. Let's start off with the sector that is the largest weighting in there. And if you give me a minute here, I think I might even be able to tell you the approximate percentage here. Let's see if I'm just looking at another screen of mine, if I can pull that up quickly. And where do I put all those things? Let's see. Give me a moment. I'm just trying to dance here, and maybe it's not that important to you to tell you but I can tell you this much for sure, that the technology sector is the largest weighting with inside the S&P 500. Here we go. There we go. So if we take a look at the XLK, number one weighting, approximate weighting structure is about 21%. So you want to make sure and then what you would want to do is you want to understand what's the weighting inside the XLK. Apple's going to be the largest weighting inside there. So right now, yesterday's move down inside the XLK was with 5 million shares. The move off of the top on August the 6th was 4.6 million shares. So we saw some accelerated volume yesterday. So far today, 791,000 shares in an hour's worth of trading. So if you straight line that number, what you're taking a look at about 6 million shares. So 5 to 6 million. Yesterday was 5 million. So we're not seeing anything explode out of here. The area to be watching inside the XLK is going to be the July 10th level, anywhere from 31.26 to 31.48. That has held as a support region. I would also say, so that's where we're going to be paying attention to on its move down. You also want to be paying attention to the volume as this comes off of the high because of the 21% or so weighting structure with inside the S&P 500. The XLK, if I switch over to take a look at the weekly chart here for us, which we'll do, and get an idea where real support is on the XLK and why we want to really pay attention to this on any move down in the market is, again, because of that weighting structure. But if we take a look here at the XLK, I'm going to pull this back. This is a longer-term chart. This goes back to March of 2009. The last time that the bottom of this rising price channel was tested was the week of June 28th. So on June 24th, when the low was being made in the XLK, which is 29.94, it was running into this rising price channel. So any move down, obviously these have to go up because of the diagonal line out here. And so if the XLK is going to get into the June 24th or the June 28th candle, it could very easily crack the bottom of the rising price channel out here. So we're going to want to watch as it comes in here. This is a price channel that is held very solidly. Only once has it been broken, and that was the week of August 19th. And very quickly, you can see even on the open on that following week, it opened right at the bottom of the, got right back inside that rising price channel out there. So the XLK is one to really be paying attention to. If we take a look at the next weighting structure inside the S&P 500, it's going to be the financials. So let's go see what's going on inside the XLF. See what kind of damage, if anything, is being done here. Yesterday's move down was a test of that May 22nd swing point. That had 95 million shares. Yesterday was a test of that level with only 38 million shares, so not enough to bust it down and get back into the lower part of the range. However, it also did not exactly bust it up when it got above the May 22nd level out there. So the real key here is watching the price level of $20.35. When the XLF, should the XLF slip down in there, with it being the second weighting with inside the S&P 500, that's what sets up a move down to the June 24th level out here, or at least the retracement to that would be 0.618 retracement that would take the XLF to about 1948 out there. So that would be that would at least be the first projected move down if it gets below $20.35. So has not done that yet. So if we take a look at the monthly chart, the weekly chart of the XLF, just like we did on the XLK, and we see what we have going on out here. The XLF, here we go on the weekly chart. The XLF is the first place that I would be paying attention to, or I will say the first place that I am paying attention to, is the actual trend line. This is the black trend line coming off of the lows from November 16th. So I'm using the low, which is 1506, and then my next set of touch points is really the low of April 19th, the low of April 26th out there. And you can see that trend line, and the verticality of that trend line is, I don't know, what do you call that, a 45, 50-degree angle, something like that. Who cares what the actual degree is? That is the level of support that you're looking at inside the XLF. And if it cracks that, or should it come down to that level, it will not have touched the July or the June 24th area. It will only be getting down. Well, the top of June 24th, which is really the week of June 28th, is 1960. And it looks to me like if price were to move down there, it's going to crack. It's going to crack that trend. So the XLF, with it being the second weighting inside the S&P 500, is going to be very critical for us to watch as that trend line. Now, there's another trend line in here. You can see three real defined lines that have acted as a support. And that second trend line is going to be the red trend line, and that's coming off of October of 2011. That's my first touch point. And I'm using as my second touch point the same November 16th candle, just trying to keep the anchor, if you will, the anchor candles the same that I'm using. So should the XLF get below that that trend line, the dark-colored trend line, if you're watching us on Tiger TV, the next area of support is likely going to be that red line out there. As far as what price point that is, I can't really give you the estimate on that, but it's probably in the 18, 30, 40, 50-ish type range, and that's trading at 2037. And the failure there, that sets up a move all the way down to the blue rising price channel line out there. So that's on the XLF. That's the second weighting, which, by the way, is somewhere right around the 17% mark out there. The third weighting structure is actually the healthcare sector, and that is the XLV, for those of you who don't trade. But let's take a look at the weekly chart on the XLV first and see if we can identify what it is doing and where there may be some support out here. And the XLV actually broke through that rising price channel. Now, that's not really considered a breakout because, let's face it, a breakout, how can it be breaking out when it's already rising? So it was just a continued move out there. But I'm still maintaining the same price channel that was in there. You can see that when price did come back down, it tested, when I say come back down, I'm talking the week of June 28th, so the June 24th low. It was trying to get back inside that price channel, and it failed to do so. So that sets up on any move down here, and you can see so far in the weekly chart, no real damage done. It's Thursday. As far as candles are concerned, that's considered a bear sash candle on a weekly basis, but that is nothing compared to the bearish engulfing evening star candle formation that occurred the week of May 31st out there. So still so far inside the healthcare sector, the XLV, not a ton of damage. That's about a 13% or so weighting inside of the financial. So you can see the XLV, 13%, the XLF, 17%, that's 30, and then the XLK, another 21, you're at already 51%. So just by paying attention to just really three sectors with inside the S&P 500, and there's a total of 9, you already have 50% of the weighting structure with regard to what's going on out there, and that becomes very helpful, in my opinion, with regard to trying to identify what's going on underneath the sheets without taking a look at what's going on with the specific equities inside the S&P 500. You can see right now the XLF really tinkering with that May 22nd $20.35 mark out here. It's at 2036. So let's go take a look at the daily chart on the XLV just to round this off here. That's trading at 50.93. Yesterday's pushed down 3.9 million shares. Today's already done 777,000 shares, so seems to be pushing down with some volume out here. The May 22nd high inside the XLV is a number of 49.29. So you can see that the XLV, the healthcare sector, actually stronger, healthier. How about that? The healthcare sector actually healthier than the financial sector out here with regard to its push down into that important swing point. Another thing that you can also do to try to get a feel for, because we're dealing with weighted structures out here. The ETFs within inside the S&P are weighted, meaning the stocks within inside the healthcare sector, the financials, the energy sector, all of them, they are weighted. You can also go take a look at look for divergences between equal weighted indexes and the weighted index. So in this case here, I'll go ahead and pull up one of those for you. You might want to try taking a look at the QQEW. The QQEW is the non-weighted version of the Qs out there. And so that's very helpful to identify different divergences. If you've got the Qs themselves that are going up and the QQEW is on its way down, that's another easy indication of the mere fact that it's only the top-weighted stocks that are trying to pull the market up. And usually when you see those divergences, they end up leading in giving you a leading indicator that you are about to see some type of correction take place out there. The one for the S&P 500, I'm sure somebody out there, I think I heard somebody ask, somebody said, hey, Steve, what is the equal weight for the S&P 500? And to answer your question, it is the letters R as in Robert, S as in Sam, P as in Paul, the RSP. That is the equal weighted ETF structure for the S&P 500. It's always good to go ahead and compare those. If we take a look at some of our other correlating stocks out here, high-grade copper, I mentioned that was up about 3% here this morning. If we take a look at high-grade copper here, recently, high-grade copper has not given us the signal here. In fact, you can see that the S&P, I'll draw it in here, especially with today's move out here inside the marketplace. Let me draw this out here. So you can see on the S&P 500, the top portion of this chart is high-grade copper. And so coming off of the swing point of July 24th or so, 23rd, we can see the high-grade copper here is making a higher high. And as well, we saw that really take place inside the S&P 500, which is now down at the bottom. So the correlation between copper and the S&P 500 is actually in sync here, with the exception of the mere fact that the S&P has sold off a bit. Now, that is quite a bit different from what we have seen inside here, recently. But you want to take a look at the current correlations. In my opinion, you don't want to get too wrapped up. I mean, we saw high-grade copper make highs back in the early part of June and just simply, move in a southerly direction. We actually did finally see the S&P 500, make a move down in the southerly correction. You can see here, if you're watching my screen here, you're taking a look at the crosshair. What you can notice, these stock charts here are unadjusted. They're not pushed backwards or forwards or what have you. But you can see the low that came in, which was on June 24th inside the S&P 500, also happens to coincide with the low that came in on high-grade copper. They're not the low, but a low before we saw a bounce back in the market. So in this case here, copper was moving up. So was the S&P 500 out here. In any event, it's one of the tools to be able to use to look for divergences. You can't really use it as timing tools out there, but you most certainly can. One of those other divergence indicators out here is that I love, as you know, is General Electric out here. The General here does lead its troops. In this case here, the General has been leading its troops down. It's been making a lower high, whereas the market here, the Dow, was making a higher high out there. That was an indication that we were going to see a correction of some sort. 877-927-6648. Be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 40 points right now. S&P just slightly red, down 68 cents. Not a big deal out there. The big deal is, again, as I said, we are now seeing every rally sold. You know, we saw some of the rally yesterday, the expected rally yesterday as we were coming into the close. We saw a little bit of a sell-off. Not much, but just a slight one. So that was a little nuance. Today's was more clear. Today's was as clear as a bell out there, and that the rallies are being sold. If you take a look at the volume as well, you're seeing light volume on the way up. You're seeing heavier volume on the way down. With regard to on the way up, that would be the Aussie dollar versus the U.S. dollar currency pair. We don't often take a look at it, but it has formed a very nice Gartley buy pattern, about close to a 0.786 Gartley buy pattern. Looks like this may be off of the bottom here. We take a look at the exact 0.786 number would have come in right around, it would have had a bit further to go, but looks to me like this is off of the bottom as we speak. And where this should retrace to is it should at least make the dead cat bounce, which is around 95 cents. And what we also have at that 95 cent area is a old area of support. Old support becomes new resistance. You want to learn to be able to draw those horizontal lines on your stock charts out there. Anything. It doesn't have to be a stock chart. It could be obviously it can be a forex chart, a currency chart, as we're looking at here. And what happens is old lines of support, and this was clearly a line of support out here, right around the 95-ish, we'll call it range out here. It was an area that was tested. It was tested back in November of 2010. It was tested in October of 2011. In essence, it was tested in June of 2012. It was tested back here in May of 2013. And finally, there was a break with conviction in June of 2013. So where that first bounce should take you to is back into the resistance line, because it used to be old support. It's now resistance. And if you can get above that, then it can move up to about the dollar range, par 99, somewhere right around there. But I suspect it'll run into resistance there, and that may be the end of its move. And so speaking of resistance, what we actually saw also take place today inside our markets was clear resistance. Back here at the old resistance line of 1695.50 or so inside the ES Mini. So if you get another gift, whether that's tomorrow on a Friday, it's a Monday, and the ES Mini travels up to the 1695.50. The gift is this. Just simply go ahead and sell, Mortimer. Sell, Mortimer, sell. That doesn't mean back up the truck. That means use proper money management strategy. So far on that 120-minute chart, the area that acted as a support zone yesterday as well was the 200 period. That means 200 bars back. Exponential moving average. You can see so far intra-session here, that's been the low today. There still is the possibility that this area will hold, giving you some more opportunities to get in on the short side. And one of those tools that you'll use to take a look at it is the low inside the Dow here. The Dow, as I said, the general is leading the troops here, and the Dow is going to be leading the market on the way down. That low of 15,375, that's the low from yesterday. It's been tested so far today. That's a hammer low. When you close below that, it's usually spells curtains in the marketplace. So on the bullish side, you certainly don't want to see that hammer candle being broken. On the bearish side, what you're looking for, if you're looking to get bearish, is to see another little bounce and just do like the bears are. Just sell each of the bounces. So stay tuned, folks. We got Basil Chapman. He's up next. Following Basil, our man Larry Pescimento. I believe Larry is gone for the day, so perhaps Basil's going to fill in for that show. Then we've got Daryl Martin, David White, Andy Heck today, and for the Tom O'Brien show, I believe it's the tag team of Basil Chapman and Andy Heck. Have a great Thursday, folks. I look forward to seeing you in the morning. Take care.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.